Hello, friends. I'm Karthik Wagela from Anand Rathi, and we are back with another weekly podcast episode with Nilesh Jain, derivatives and technical analyst at Anand Rathi. Thank you, Nilesh, for joining in our podcast series to share your market outlook for the week. Hi, Nilesh. Welcome to another podcast.
Nifty has started the year 2021 with a fresh new high. Where are we heading now and how's the bank Nifty looking on charts?
Hi Karthik. First of all, a very happy and a prosperous new year to all the listeners. And if you look at the last year, which was quite an eventful, where we saw both the phases of the market, a sharp decline and a V-shaped recovery as well towards the end to end at all-time highs. And we hope that the Nifty continues the momentum and scale towards 15 to 16,000 levels in the year 2021. So, towards the end of this podcast, we will also be recommending couple of picks for the year 2021. So, stay tuned. Now, if we look at the technical structure for the Nifty, the bulls regained the control after pausing the previous week, where the Nifty index surpassed the psychological barrier of 14,000 levels for the first time in the history, and it has also continued its high top and high bottom formation on the daily scale. Now, since we have a budget in the month of February, so ahead of budget, we can expect a further upside rally on the back of a pre-budget rally in the January series. The overall structure for the Nifty index hints at a further upside move towards 14,200 to 14,300 kind of levels in the coming week. On the flip side, the immediate support, which is now placed at 13,800 levels, and only a breach below the same would bring bears into the action. Till the time Nifty doesn't break below the same, we can expect Nifty to trade with slightly positive bias. Although looking at the setup, the immediate support which has now also shifted towards 14,000 levels. On the other hand, if you look at the volatility index India weeks, which is hovering below 20 levels from past couple of days, and it is very much in the comfort zone. The overall range for the India weeks is 15 to 25, which is very much intact, and the bulls are likely to have an upper hand in the market. If you look at the broader markets which have outperformed and also hinting at a fresh momentum on the higher side, thus a defensive trader needs to adopt a stock specific action from the mid cap and small cap space. On the other hand, if you look at now the structure for the bank Nifty, as expected, it has outperformed compared to the Nifty index and formed a bullish candlestick pattern on the weekly scale. It also surpassed its major hurdle of 31,000 on the closing basis, which will now act as an immediate support, followed by 30,400. So as long as Bank Nifty holds above 31,000 levels, we can expect further momentum in the Bank Nifty to continue towards 31,500, 31,800. These are the immediate levels that we are expecting for the coming week. If at all we see any breakout above 32,000, then a fresh new high is also expected in the Bank Nifty, which is placed at 32,600 levels.
Can you share your few observations about Nifty open interest for the coming week?
Well, on the derivative front, a huge amount of put writing was seen on Friday at 14,000 strike, which now holds the highest open interest of 25.2 lakh contracts. So the base is gradually shifting higher, and the 14,000 levels will now act as an immediate support for the coming week. On the call side, a fresh addition was seen at 14,200 and 14,300 strike, where nearly 13 lakh contracts were added in both the strikes. The maximum open interest of 27.8 lakh contracts is placed at 14,000 strike, and we haven't seen any unwinding yet, which indicates a tug of war between 14,000 call and put writers. Hence, in the coming week, if Nifty manages to sustain above 14,000, then we can expect further short covering move towards 14,200 to 14,300 levels. So based on the derivative data, we can expect Nifty to oscillate in a broader range of 13,800 to 14,300 in the coming week.
Nilesh, now can you please share your stock ideas for the year 2021?
So Karthik, as promised, we have identified three best picks from three different sectors for the year 2021 on the basis of technicals. And to start off with, the first counter that we are liking is from PSU banking space. If you look at the overall sector, which has been laggard, and we have chosen State Bank of India from that particular sector. The stock has formed a strong base at around 150 levels, where we can see multiple support zone, and it has shown a smart recovery as well. On the weekly time frame, it has surpassed its 200 weekly moving average recently, and on the monthly time frame, the MACD has provided a fresh buy crossover, whereas RSI has reversed from its oversold territory. So based on the rationale, we can expect further momentum to continue in for the next couple of months towards 350. So that is the immediate target, followed by 400. So there are two targets for State Bank of India, and the stop loss should be placed at 220. The second counter is from auto space, and we believe the auto could be the outperformer for the year 2021, and Motherson Sumi is the preferred pick from auto space. The counter has already witnessed a recovery and also provided a fresh breakout from its pre-COVID level, which was placed at 150, and looks like the counter is heading towards 250, and the stop loss should be placed at 110. Third and the last one is from oil and gas space, HPCL, Hindustan Petroleum, where the counter has formed a strong base. I would say a triple bottom formation can be seen on the monthly time frame, and the MACD has provided a fresh buy crossover. Along with that, RSI is in the oversold territory and showing signs of reversal. So based on the rationale, we can expect HPCL to outperform, and there are two targets that we are expecting. 350 is the first one, and the second one would be 380. And the stop loss should be placed at is the bottom formation, which is placed at 150. So these are the three top picks that we are recommending for the year 2021. Follow the levels strictly on the both the sides. Thank you.
Thank you, Nilesh, for sharing your valuable inputs with us. I am sure our listeners have gained great insights from you.